if there are two factors that drive the crypto market overall at a macro level, one is liquidity and the other is the adoption of the technology. So if you assume that liquidity doesn't come back, i.e. nothing changes, does the ecosystem grow? Do we get new applications for the technology, in which case it will perform just not as well as previous cycles? If you've got liquidity as well, which is the economy looking shit? Is it going to remain shit? Are the central banks going to have to do something about it because unemployment's starting to rise or inflation's starting to come off too sharply, or the banking system's blowing up? Those factors, then you bring the liquidity equation back in. Currently, we've got the liquidity equation and a little bit of the adoption equation coming in. The sweet spot of the market is when both are happening. So I don't think we would have, for it to do something catastrophically different, i.e. be very negative, we'd have to see an ongoing decline in the use of the technology and an ongoing rate of change negativity to liquidity. But rate of change liquidity, even if they just stop tightening rates and stop shrinking the money supply and stop decreasing the balance sheet, is enough for the beach ball underwater. The beach ball is the adoption of technology plus animal spirits. So, these are the factors that everyone needs to assess at all times. And again, nobody has the truth. Nobody has a crystal ball into the future. I think I've developed one with this thing called the Everything Code, but it's a hypothesis.
Macro investor and real vision luminary, Raoul Pal, has unveiled a potentially revolutionary hypothesis that holds the potential to remarkably predict asset prices in the coming months. Termed Everything Code, Pal delves into the intricate interplay between multi-year liquidity cycles and government debt repayments. He argues that these combined forces place a cap on interest rates, thereby influencing the movements of all asset prices. In his recent interview, Pal demystifies the connection between asset price growth and the growth rate of the money supply M2, unveiling a surprising correlation that highlights the impact on currency value rather than soaring asset prices. Pal's groundbreaking Everything Code anchors on this revelation, altering the denominator for all assets to the global central bank balance sheet. This shift transforms the lens through which we perceive market fluctuations. Under this innovative framework, most assets, including stocks, bonds, real estate, gold, and silver, show limited growth, akin to treading water. However, two assets stand out as outperformers: technology and crypto. Pal explains his bullish outlook until 2025, shedding light on his perspective on the latter half of 2023. As many investors remain underexposed, his insights offer a unique perspective on market dynamics.
The Everything Code is actually culmination of 19 years of work, where I spend the whole time in macros trying to solve bits of puzzles, and then suddenly, occasionally, everything comes together. And this was 19 years of work coming together to understand everything from the demographics, which I've been working on for a long time, plus what happened in 2008, the political climate, globalization, all of these things come together. And I realized that, to cut to the chase, the central banks, their printing is actually to pay the interest on the previous cycle's debt that they accumulated. And it's proven out over time. And so that's a very powerful hypothesis, because the last cycle was the massive printing for COVID. So it suggests we get a huge amount of printing to come in 2024, 25. And I think the central bank balance sheet goes from wherever it is now, 6.5 trillion, to maybe 12 trillion. So that's an enormous amount of money to come into the system. Interest rates have to come lower because everybody needs to service the debt. But what I've done in the whole Everything Code is, because I've got a lot of forward-looking indicators, I kind of think I know what drives liquidity and how to look forward. This will not, it's a hypothesis, but therefore, because I know the correlation between assets and the balance sheets, I can forecast asset prices out to 2026, which is arrogant and hubristic. And I'm not expecting it to be perfect, but I think I found something really fucking big. I've just started publishing in Real Vision, so if anybody's a Real Vision member, I think all members for the Essential membership got one part of the article. It's a 3-part article on Real Vision. The Real Vision Pro, Crypto Pro Macro guys are getting it right now. So it's it's the most important thing I've ever done. Whether it's right or not, I don't know. So I've been on that, and then, I've built 2 other businesses in the crypto space. One is Exponential Age Asset Management, which is to allow RIAs, pension plans, family offices access to the market in a way that's very helpful to them, which is via hedge funds in the space, in the crypto space. And then I was the co-founder of Science Magic Studios, which is tokenizing culture, music, fashion, sports, entertainment. And that's a really interesting space because that's one of the big bets that I think will play out over this cycle. And then at Real Vision, we've rebuilt our entire tech stack to build out a platform that is the kind of nexus between community, Web3, AI, and just the place for people to live their financial lives. So that's working really hard on that now. We've got the ultra first beta stage internally. We're now just building on top of that as we start launching that. And that will be an iterative process, but sometime over the summer, people will see this new platform. We think we've got some really interesting stuff that's not been done before to give people the power of knowledge, augment people in their financial journey, that kind of stuff. Look, it looks very bullish from here on out. This year, this is why I'm really reticent, so I'm never going to name numbers. I'm really reticent because this year looks more bullish than even I expected. But what is really interesting is the Everything Code also just matches the log channel. It kind of is in the same direction, or whether it's the wave version of that channel. They're all consistent amongst different ways you back in and out. So yeah, it just looks like a crypto cycle, and it looks like it should be. And it should be, I don't think it's a pure function of the debasement. If it was, then 2021-20 cycle would have been even bigger. So it's not, right? So it's a function of the amount of capital available to move the space, etc. So yeah, it looks very positive to me, and I don't think we need to get worried until 2025. And it's not to do with the halving. The halving happens to be coincidental with the big reset. People talk about the big reset to come. We had the big reset in 2008. All interest rates went to zero, everywhere. It was like a debt jubilee. You don't need to pay your interest on your debts. What that did was force every government and most corporations to reset all of their lending, all of their borrowings, into this 3 to 5 year window. So most government debt is 3 to 5 year debt. What that meant is it created an interest rate cycle and a business cycle and a liquidity cycle that was 3.5 years on the nose, or 4 years, which is exactly because Bitcoin came out at exactly the same period. Its cycle is driven by the same things. It's driven by this debt cycle. This debt cycle is not going to go away yet until productivity is large enough to destroy the issue of the debt itself. We're not there yet. So I think it just keeps repeating. And once you understand this thing, it's one of the big unlocks in the Everything Code. It's like, oh my God, everything makes sense now. I don't have to chew myself up with trying to figure all this stuff out. It's kind of in plain sight.
Enter Raoul Pal with his groundbreaking concept, the Everything Code, poised to revolutionize the strategies of investors navigating the ever-evolving economic terrain. Throughout the interview, Pal adeptly unravels the complex interplay among asset prices, liquidity cycles, and government debt repayments. His intriguing correlation between the growth rate of the money supply M2 and asset price fluctuations unveils a profound understanding of shifts within the financial landscape. Pal's insights reveal a shift in focus from merely asset prices taking significant leaps and bounds to a more profound currency devaluation at play. By introducing global central bank balance sheets as a denominator, the Everything Code presents a novel paradigm for interpreting market dynamics. With meticulous analysis, Pal sheds light on fundamental changes, offering investors a transformative perspective on the shifting economic landscape. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.